The constraints are, yeah, they want to prop up the economy a little bit, but they still don't want to push up the debt load. So they're being a little bit cautious about how much fiscal firepower they really bring to bear. And I think as far as the market is concerned, they don't want a repeat of 2015, where you had the market doubling in the space of about 6 months and then giving it all back in the next 2 months and chaos resulting. So they're still trying to figure out what's the right way that they can stimulate a little bit without pushing up their debt level too much, and without leading to what they would, I think, consider to be irrational exuberance in the market. And I don't think they've fully made up their minds on how much they can do.
Arthur, where does structural economic reform fit into all of this? And does it feel like, as much of an inflection point as these stimulus measures could be, are they still short-term in nature? And how much work does the leadership have to do to really crack the nut of structural economic reform? Where are we on that journey?
Yeah. I think you've put your finger on where the disconnect lies between what people from the outside are looking for and what the leadership in China is looking for. As far as I can tell, the leadership in China is still committed to the strategic vision that has been laid down by Xi Jinping in several policy documents over the last couple of years. Most recently, the third plenum document this year, where he says, look, we just have to shift to a lot of investment in high-tech manufacturing, and we have to really squeeze tight on property and some of these old drivers of growth. And it'll be painful, but we need to make this transition. And they still seem committed to that. They've made a little bit of a tactical shift saying, yeah, we need a little bit more growth to keep things going. But no, in terms of the things that you and I would think of as structural reform, fiscal reform, financial sector reform, changes to the residence permit system, there really doesn't seem to be that much going on. So they're basically just trying to figure out what can we do on monetary and fiscal policy in the short term to keep growth okay, so that we can go through this longer term transition. So if you're waiting for what we call structural reform, it's not going to come, I don't think.
Not going to come. So, Arthur, would it be fair to say that, look, they figured out what they want the new model to be, which is chips, high tech, rather than condos, bricks and mortar, right?
Right.
And they've got a pretty decent idea how to get there.
Right.
But they don't, or they're still trying to figure out, how do we do that while bringing the old model, the old economy, along with it, and making sure it doesn't either drag us down or slow us down from getting to this new model? Is that the situation China's in right now?
Yeah, I think that's one way to put it. The way that I would put it is, essentially, they think all of the problems in China have a supply side solution, right? So it's all about how do we get investment moving to the right things. And they really, really do not have a theory or a concept of how demand can play a positive role. And I frankly find this a little bit perplexing. If you look at innovation globally, a lot of it is driven by consumer demand. So even if you want the things that they want, which is more high-tech industry, it seems like you should want more consumer demand to help drive that. But they really just don't believe that that's how the economy works. So they're kind of stuck in a, kind of a slow growth situation.
Yeah. Arthur, listen, let's just make it a little sensitive, but I'll leave you to navigate around it, because you're an old China hand and an expert on this. Is part of the problem philosophical or even political? Because, this is a centralized command economy we're talking about, right? Where from the top down, somebody goes, look, I want 5% growth, therefore we will achieve 5% growth, as opposed to, look, there needs to be the demand there to generate that 5% growth.
Right. I think there are a lot of ways that you could characterize it, but, to me, the central problem is that you have a kind of economic leadership, and this is like more than one person. This would be, I think the group of people running the economy who have committed to a vision of, growth in a certain way, which is driven basically by investment in high-tech sectors. And they just don't seem to accept the idea that comes second nature in places like the United States, that demand needs to be a big part of of the picture. So yeah, they are trying to stimulate demand now. That's what this fiscal and monetary stimulus is about. And some of it is really good. I mean, they've essentially deregulated the mortgage market. That's going to be very helpful for families that want to buy houses. So it's not like they're doing nothing, but I think the concept is that they're doing just enough to support growth at roughly the current level or somewhat higher. They're not really trying to re-accelerate. And I think a lot of people outside of China are looking for something more along the lines of re-acceleration. And that's why we're now in a stage of a little bit of disappointment.
Arthur, does this build out of high-tech industries lead to a situation where China almost becomes a victim of its own success and has to export excess capacity, which is what it has been doing with renewable energy capacity, with EVs, and then ultimately the barriers go up as they are going up in Europe and elsewhere? Yeah. And how does China manage that?
Well, I think one of the issues is that so far they've looked at all of this protectionist pressure, and it hasn't really had much of an impact. China's exports continue to grow. They continue to pick up market share. So I think there's a tendency in the leadership to say, yeah, the countries will try to protect, but it really won't have that much impact because, frankly, our products are more competitive, right? So I think there needs to be a little bit more visible pain in the export sector where markets really do get visibly shut off before they start to recalibrate. And I just don't think that they have seen enough actual material cost from trade restrictions yet to make a significant change in their direction.